And we start off with a big night of tech earnings. Check out the action Apple, Amazon, Intel, and Roku after reporting results. Our CNBC All-Star reporters lined up, ready to go. The Apple, Intel, and Roku conference calls just kicking off. Let's get straight to Steve Kovach to break down Apple's quarter. Steve.
Yeah, Mel, let's really talk about foreign exchange here. This is something we're already seeing the impacts of on Apple's last quarter. I got off the phone with Tim Cook earlier this afternoon, and he told me those foreign exchange headwinds are partially to blame for that 10% drop in Mac sales that they just reported. Now, Apple doesn't give formal guidance. They haven't during the entire pandemic, but you can bet that this call is going, that's just starting right now, is the foreign exchange is going to be the whole theme. How bad was it, and what is Apple going to do to mitigate it? I asked CFO Luca Maestri about just that. He told me, quote, and then, of course, at some point, we know in certain markets, it becomes more and more difficult to hold prices. So let me translate that for you guys. It means prices for some Apple products are going to go up in those regions where the dollar is especially weak. Now, the call's just kicking off right now, and I'll come back to you with any updates on those foreign exchange headwinds. Mel?
Steve, did Maestri talk about the macro environment, about consumer demand?
No, we did not get into that, but you can bet on the call that he's going to get a ton of questions on that, Mel.
Yeah. Okay. Steve, thanks. Steve Kovach. We were all worried about Apple, knickers in a twist guy, because Apple ran up so strongly going into this print. And here we are with a gain of 4% after hours.
Yeah, I don't know what knickers are. And if they're in a twist, it sounds painful. But that's probably for another show at another time slot. And listen, we've been saying, Apple ran into earnings. We sort of thought that was going to happen. I thought the quarter would disappoint. Clearly, that's not coming to fruition. But you start to look at the numbers. I mean, service revenues, which I think people were concerned about. Katie Huberty pointed that out a month and a half or so. They came in at 23% of their overall revenues. That's pretty much in line with where it's been. But then you look at it, 2% year-over-year revenue growth. That's the slowest we've seen in a couple of years. And at current levels, even if you say they're going to earn close to $7 next year, which is probably the higher end of guidance, you're still talking about a company that's now trading at this price at 23 times those numbers. So I think it's sort of run its course. I think. We'll see how it plays out. But I've thought for a while the broader market would run into Apple earnings 4,100. That's playing out. I thought it would reverse on this. Let's see what happens.
Yeah, they did comment about supply chain issues, saying that the cost of sales to supply chain issues were a little less than $4 billion in the quarter. They also said they anticipated that the supply chain issues would be better in September versus in the June quarter. They talked about ad sales, Dan, so they did address some of these sort of macro concerns as it relates to, some of the headwinds the other tech giants are facing.
Yeah, I think in the investor letter, it also said, Mel, that they're not seeing these macro concerns having an adverse effect on iPhone demand. I thought that was a really interesting comment. I also thought it was interesting that it sounds like they are pushing ahead with hiring. They are not slowing. I know there was some indications that they might be, and we've heard that from a lot of these kind of mega cap tech names over the last, let's say, month or so. So listen, there's really nothing to knock at this one here. It's too bad they're not going to give a little bit of guidance. They did give that color as far as supply chains that you just mentioned. I'll just say this, that the outperformance of Apple from the lows in June, it doubled up the performance of the S&P 500. It's trading at 163 in the aftermarket here, which is up about 25% from those lows. It is above its 200-day moving average. You will not find another mega cap tech name anywhere near its 200-day moving average, which just kind of shows you that outperformance. Yeah, some groups like the XLE, the large integrated oils, or the staples are above that. Listen, I think some technicians, some people who look at the importance of a name like Apple may say, this is how we bottom. I just don't think that's the case. When you think about what we just digested with this GDP print and the commentary from the Fed, it's fine that Apple's bucking that trend right now. We know that they're great operators in difficult environments. I just kind of think about this a little bit differently, that it just will not be able, it's not going to end like this. You know what I mean? Now, I know that some of us were waiting for maybe Apple to kind of ring the bell a little bit and say and confirm some of our worst fears, but maybe it just gets pieced out over time a little bit.
Yeah, that could be it. And I mean, the confusing thing maybe for people at home might be that we heard Jerome Powell yesterday saying that the impact of rate hikes is lagged. And so the question here is what Apple saw in the most recent quarter, is that where we are? Is that where we're going? Or is where we're going really a worse picture than what we just witnessed through this quarter, Courtney?
Yeah, well, I think that's what's really important to look at it with Apple, which I think Dan actually had a really good point here. They had an increase in their iPhone sales, which I find really promising. But if Qualcomm was any indication, we actually saw that they're expecting for smartphone sales to decrease demand when we look at next quarter. So I think looking at last quarter is one thing. Moving forward, if we are still seeing that strongness in the consumer, which is really important, that can really lead to some positivity in the markets. And that's really what the markets are so happy to see right now is Fed came out, they raised interest rates, essentially what was expected. That was already priced in, and they're starting to see that inflation there's some signs here that might be coming down later this year, early next, and that ultimately can be a good thing for the consumer over the long run.
So, Bonawyn, is Apple a barometer or is Apple an exception?
I think going in, a lot of us thought that they might be the barometer for the overall general economy and how to best navigate through that. As you get to see more and more earnings, it seems like they are actually the outlier. And to Dan's point earlier, that kind of sets up how you can have a case for, a declining market, but you still have these one-off bellwether stocks that are able to kind of hold. We were concerned about China and supply chains. They seem to be able to navigate that. The FX effect is pretty much going to affect all companies, so I don't think you can really part and parcel that. And then you were worried about gross margins kind of going forward and how they would go through this current situation. If they've held in strong in the mid-40s, you compare that to, it's very hard to compare, but you compare it to like, a Roku or a Netflix or countless others, you are seeing increased divergence there. And while I thought or actually had concern about Apple coming into this print, I'm becoming more convinced that Apple and the market will continue to diverge and that investors will continue to rush to the stock as a safe haven.